Hello, this is Japanese Economic Review Channel. This time, let's take a look at SBI Securities' domestic weekly outlook.
Yeah, it's great to be here. And honestly, looking at the data for the week ahead, outlook almost feels like, oh, well, a mild word for it.
Right.
We are staring down the barrel of a week that could fundamentally reshape the market narrative for, the first quarter of 2026.
I completely agree with that. So, for those of you tuning in to this deep dive,
Huh.
we're analyzing the market landscape for the week of February 23rd to February 27th, 2026. And I gotta say, if you're the type of investor who likes a quiet, predictable ride, you might want to close your eyes for this one.
Tap them.
Because we have a holiday-shortened week here in Japan that is somehow packed with more pivotal data than we usually see in a full month.
It's an incredibly dense schedule. I mean, we have the titans of the U.S. tech sector reporting earnings.
Yeah.
We've got the specter of these Trump tariffs rattling the geopolitical cages. And we have a doubleheader of inflation data that could really force the hands of central banks on both sides of the Pacific.
It's a ton to digest. So to keep things organized for you as you listen, we're going to break this broadcast into three really clear segments based on that latest SBI report. First, we're going to tackle part one, which is this week's stock market outlook. We need to discuss where the Nikkei is headed and why the forecast range is just, well, so incredibly wide.
Right, and then we'll move into part two, focusing on key focus materials and exchange rates. This is really the battle of the yen versus the dollar and how shifting interest rate expectations are pulling that rope in two completely different directions.
Yeah, the classic tug of war. And finally, we'll wrap up with part three, the weekly timetable. So get your planners out, because we are going to do a detailed day-by-day walkthrough of the schedule. There are specific IPOs and data releases you simply cannot afford to miss this week.
That timetable is crucial. In a week like this, the sequence of the information matters almost as much as the information itself.
Absolutely. So let's jump right into part one, this week's stock market outlook. But before we forecast the future, we always have to anchor ourselves in the immediate past. How exactly did we wrap up the previous week?
Well, the market was essentially in a holding pattern. The Nikkei stock average closed the week at 38,084.48. That is a decline of just about 43.61 points compared to the previous week.
Right, and the top EX?
The top EX was also down slightly, closing at 2,625.70.
A drop of 43 points on an index of 38,000. I mean, that feels like a rounding error. It sounds like everyone was literally just holding their breath.
That is exactly right. It was a classic wait-and-see market. You had holidays in the U.S. kind of interrupting the usual flow, and frankly, everyone is just terrified of making a big move before the major earnings reports come out.
Makes sense.
But the crucial takeaway here is that we are still hovering right near that psychological 38,000 mark. The floor hasn't fallen out by any means.
So we're just treading water right now. Now, looking at the forecast for this coming week, 23rd to the 27th, what is the exact range SBI Securities is predicting?
They're forecasting a fairly wide range. They see the Nikkei moving between 35,500 yen on the low end and 39,000 yen on the high end.
Whoa, hang on. 35,500 to 39,000? That is a 3,500-point spread. That suggests we could see some really serious volatility.
It does. It suggests that depending on how a couple of key variables play out, the market could either, rally to new highs or take a significant stumble. It is very much a binary outcome week.
Okay, let's unpack those variables then. The report highlights two main drivers. The first one is the tech sector, specifically AI and semiconductors.
Correct. The absolute center of gravity for the market this week is NVIDIA. They're scheduled to release their financial results on the 26th U.S. time.
It honestly feels like the entire global economy revolves around NVIDIA's earnings calls these days.
It's really not an exaggeration at this point. The report points out that NVIDIA's performance is going to heavily dictate the direction of the Japanese high-tech sector. If NVIDIA offers a really strong outlook for the fiscal year 2025-2026, it could pull the entire Japanese market up with it.
Because it essentially validates the whole AI supercycle thesis.
Exactly. It proves the demand is still there.
Do we have any clues going into this? Any breadcrumbs in the source material that suggest whether it's going to be a good or bad report?
We actually do have some pretty positive signals. The SBI material notes that TSMC, that's Taiwan Semiconductor Manufacturing Company, saw their sales from November to January increase by 30 to 50% year over year.
30 to 50%. That is massive growth for a company of that size.
It is huge. And on top of that, Supermicro recently posted solid earnings as well. These are companies all operating within the exact same ecosystem. So if the companies making the chips and building the servers are selling more, logic dictates that the company designing the AI brains, NVIDIA, should be doing quite well too.
Right, so that's the bull case. If NVIDIA knocks it out of the park, we test that 39,000 level, but what is the other driver? The report mentions something a bit more, well, political.
Yes, the Trump tariff factor. This is really the dark cloud hanging over that sunny AI landscape. There is renewed chatter and, frankly, real concern regarding the potential for these tariffs.
Oh boy, we have certainly heard this song before. And just to be clear for our listeners, we're simply reporting on what the SBI says about market reactions to these potential policies, not taking any political sides here. What are the specifics being discussed in the report?
Of course, the report mentions the threat of a uniform 10 to 15% tariff.
A uniform tariff, meaning 10 to 15% on literally everything coming into the U.S.
Potentially, yes. And this creates a very complex double-edged sword for the market to price in.
Break that down for us. Why is it double-edged?
Well, scenario A is the serious scenario. If the market starts to truly believe these tariffs are actually going to be implemented as stated, it's bad news. It's highly inflationary for the U.S., which messes up their interest rate trajectory, and it's terrible for global trade volumes.
Right. That would likely hurt Japanese export stocks significantly. If it costs more to sell cars or electronics in the U.S., Toyota and Sony take a hit.
Exactly. But then there's scenario B, which we can call the bluff theory. The report suggests that if the market perceives this talk as merely a negotiation tactic, a bluff, to secure better bilateral trade deals, then we might actually see relief buying.
Meaning the market realizes the world isn't ending, the worst-case scenario is off the table, and stocks surge back up.
Precisely. So the SBI outlook concludes that the market will likely fluctuate based on this intense tug-of-war between these two headlines. But interestingly, their forecast actually leans slightly toward a potential rise.
Oh, really?
Yeah, they seem to think that if the earnings from the high-tech sector are good enough, they have the power to sort of overpower that political noise.
Got it. So keep your eyes on the semiconductor chips, but definitely keep an ear to the ground for those political headlines. Now let's shift gears to part 2, focus materials and exchange rates. Because you really can't talk about Japanese stocks without talking about the yen.
That is rule number 1 of the Japanese economy. Currency drives earnings.
So what is the forecast for the dollar-yen pair this week?
The report forecasts the dollar to trade between 152.00 yen and 157.60 yen.
157.60. That is getting pretty weak for the yen again. Why is the dollar remaining so stubbornly strong?
It all comes back to the U.S. economy. The report specifically mentions sticky inflation. The recent CPI data we saw out of the U.S. was strong. Too strong, actually. And when you look at the FOMC minutes that were released back on the 18th, the Federal Reserve is clearly taking a very cautious approach.
Meaning they are not going to be cutting interest rates anytime soon.
Exactly. The whole market narrative has shifted from when will they cut to rates might stay higher for much longer. And when U.S. rates stay high, holding the dollar stays very attractive. That capital flow is what pushes the rate toward that 157 mark.
But on the flip side of that equation, we have the Bank of Japan. What is going on domestically?
This is where it gets really interesting for us this week. You asked earlier about clues. Well, for the BOE, the biggest clue arrives this week on Friday, February 27th.
What exactly happens on Friday?
That is the release of Japan's January Nationwide Consumer Price Index, the CPI.
And why is this specific data release so critical right now?
Think about the mechanism at play here. The Bank of Japan is actively looking for reasons to normalize their policy, meaning they want to hike interest rates. If this Friday's CPI number is strong and shows solid, sustainable inflation, market expectations are going to skyrocket that the BOJ will hike rates at their March meeting.
And if the market expects a rate hike in Japan?
The yen strengthens. Traders will start buying yen in anticipation of getting those higher yields. And that buying pressure would push the currency pair down toward that 152.00 level.
So we essentially have another massive tug-of-war here. The Fed's reluctance to cut lifts the dollar, but the BOJ's potential readiness to hike lifts the yen.
It is a perfect storm for currency volatility. And just to make it even more dramatic, the U.S. releases its own crucial inflation data, the PCE deflator, on the exact same day, Friday the 27th.
Wow, so Friday's basically just inflation day.
It really is. Japan's numbers in the morning, U.S. numbers at night. Those two data points will very likely determine the entire trend for the exchange rate for the next month.
Because if Japan's inflation is high and U.S. inflation is also high,
you get a violent collision of forces. The pair might just whip back and forth. But if one is low and the other is high, You get a very clear breakout trend.
It sounds like currency traders are going to need a lot of coffee on Friday.
Coffee and nerves of steel, yes.
Okay, we understand the stakes now. We've got the AI earnings boom, the tariff bluff, and this massive inflation showdown. Let's map this out day by day so you listeners know exactly when to pay attention. This brings us to part 3, the weekly timetable.
Let's walk through the specific schedule provided in the source material.
Starting with Monday, February 23rd. What is happening?
Well, for our listeners here in Tokyo, you get to sleep in. The Japanese markets are closed for the Emperor's birthday holiday.
A nice, quiet start for us. But what about the rest of the world?
Europe and the U.S. are wide open. Over in Germany, we get the IFO Business Climate Index for February. And in the U.S., we're going to see new home sales data for January.
Now, why should a Japanese investor care about U.S. new home sales on a day when our market is closed?
Because housing is a major leading indicator. If the housing market is hot, it feeds directly into that sticky inflation narrative we just discussed. If the U.S. numbers come in surprisingly strong on Monday, the dollar might already be trading much higher by the time Tokyo even opens on Tuesday.
That is a very good point. Okay, moving on to Tuesday, February 24th. The Japanese market wakes up.
Yes, it does. On the U.S. side first, we have the Case-Shiller Home Price Index and the Consumer Confidence Board Index. Again, both are checking the underlying health of the American consumer.
And looking at the source table here, I see something happening in the Japanese equity market on Tuesday, a new listing.
Correct. We have an IPO, an initial public offering. The company's called Inoval. And for those of you tracking tickers, the code is 504A.
Inoval, 504A. You know, it's always a good sign of general market vitality when new companies are continuing to list.
Indeed. It brings fresh capital and fresh attention into the market.
Now, Wednesday, February 25th. What is on the agenda there?
Wednesday brings us the 10-year interest-bearing government bond auction in Japan.
Now, normally bond auctions sounds like the boring part of finance, but given our whole discussion about interest rates today, I assume this is actually quite important.
It is critically important this week. The auction shows us market appetite. If demand for these bonds is weak, the yields, meaning the interest rates, are going to go up. If Japanese yields spike on Wednesday, it puts even more pressure on the BOJ to act sooner rather than later. It's really a precursor to Friday's CPI data.
Makes sense. And in the U.S. on Wednesday.
More housing data, new home sales for January, but really Wednesday is just the market taking a deep breath before the plunge.
Because Thursday, February 26th is the big one.
Thursday is absolutely the climax of the corporate calendar this week.
Lay it on us.
First, on the macroeconomic side, the U.S. releases the revised GDP figures for Q4. That gives us the backward look at their economic health. But the headline act is the earnings. We have NVIDIA and Salesforce releasing their results.
This is the moment of truth for the stock forecast we talked about back in part 1.
Exactly. NVIDIA's report comes out U.S. time, which means the Japanese market is going to react to it first thing Friday morning. This one single report could single-handedly push the Nikkei toward that 39,007 target or drag it down significantly. It dictates the sentiment for AI, for tech, and really for risk-taking in general across the board.
Because if they beat earnings, the semiconductor stocks in Tokyo probably go vertical. And if they missed, well, let's not even think about that yet.
It's incredibly high stakes.
So Thursday night is sleepless for the analysts, and then we wake up to Friday, February 27th, the day you called Inflation Day.
I did, and the schedule is just packed. At 8:30 a.m. Japan time, so before the stock market even opens, we get the January Nationwide Consumer Price Index, the CPI.
8:30 a.m. sharp. That's the number that determines the BOJ expectations.
Right. And we also get January industrial production data at roughly the same time. But the CCI is the main event. If that number is hot, the yen is going to strengthen immediately.
And then that night,
the U.S. releases the January PCE deflator.
the personal consumption expenditures deflator?
It is a mouthful, but it is the Federal Reserve's preferred measure of inflation. It tracks what people are actually spending their money on.
Yeah.
If the PCE is hotter than expected, the dollar rips higher. If it cools down, the yen might have a chance to recover.
And just to cap off the week, are there any more earnings or listings on Friday?
Yes, there are. In the U.S., we have earnings from Autodesk and HP Inc. But back here in Japan, we have another IPO listed on the schedule for Friday. The company is GNext, and the ticker code for that one is 505A.
GNext, 505A. So we have Inoval on Tuesday and GNext on Friday. That's 2 IPOs in a 4-day trading week.
It just shows that despite all this macro uncertainty we're discussing, there's still real appetite for new business in Tokyo.
So, to recap the week's flow for everyone listening, Monday is a holiday here. Tuesday and Wednesday are building tension with housing and bond data. Thursday is the NVIDIA explosion. And Friday is the macroeconomic judgment day with massive inflation data from both sides of the Pacific.
It is relentless. It really feels like the market is trying to figure out its entire identity for the rest of 2026 in just this 1 week.
It's a crucible. We are oscillating between an AI boom and an inflation bust. And the data points this week, NVIDIA's guidance and those CPI prints will finally tell us which narrative is going to win out.
That is the key right there. We spend so much time worrying about politics and tariffs, and look, those are very real risks. But when you look at this timetable, it's really about the fundamentals, prices and profits.
It is. Politics makes the noise, but earnings and interest rates make the trend. If NVIDIA is selling chips hand over fist, and if Japanese companies can successfully pass on their costs to consumers, that's the reality the market cares about most at the end of the day.
Exactly. The tariff talk is just the background music. Earnings are the lyrics.
And for you, the individual investor listening to this deep dive, it sounds like patience is the ultimate virtue this week.
Absolutely. With a forecast range this wide, 3,500 points on the next cent, Nikki trying to guess the direction on Monday might just be a gamble. Watching the reaction to NVIDIA on Friday morning, along with that CPI print, will give you a much, much clearer picture of the actual trend for March.
It's going to be a fascinating week to watch unfold. I'm particularly interested to see if that bluff theory regarding the tariffs holds water or if the market starts getting really skittish.
That will definitely play out in the background, but my advice, keep your eyes on the screen Thursday night and Friday morning. That is where the real action is.
Well, we will certainly be watching very closely. It looks like we are out of time for this deep dive.
Time really does fly when you're discussing global economics.
It does. Before we go, do you have any final provocative thought for our listeners to mull over?
Just this. While the tariff headlines might grab your attention because they're loud and they're scary, remember that the real fundamentals to watch this week are NVIDIA on Thursday and Japan CPI on Friday. Those are the hard numbers that will actually move your portfolio.
Clear, concise, and straight to the point. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.